Welcome to TradeTheMBI.com. This report is for the 19th of December. Happy birthday, 18th birthday to my daughter, Grace. Very exciting for her. And well, yesterday was an exciting day in the market. This became pretty straightforward as we were talking about it. While the S&P didn't have the positive extremes, we know the NASDAQ did. And basically they got filled back in pretty quick. Some people were talking about it from a Powell decision. Others could say that it's a realization of what we were talking about in the other videos about how it was going to come to a reality of whether or not the Trump administration was going to be, that's coming in will be serious about cost cutting and that. And you saw the collapse of the budget deal. And that's a concern because a lot of that pork is what fuels big business. And they're looking at the potential of, oh my gosh, we may not be getting such a free ride from the economy that we have been getting, which is just basically handouts and freebies in the form of, inefficient activity. And so the Fed being hawkish, it's not that big a deal. But the fact is that things have gotten a bit out of control. We can see the deficit spending, and if you reduce that deficit spending, a lot of that money is not going to regular individuals; it's just going to corporations, and so they're going to be hurt bottom line wise. There's just no question about that. So we had talked about this a while ago when these first had positive extreme here and the positive extreme here. Well, that one got filled out pretty quick, and then the lower one. What's the number right there? We can see it 21,226. What was our low? 21.3. You think that not complicated? I mean, pretty clean, straightforward. And this wasn't even necessarily short driven as much as just sellers. They just no interest. We can see it here in DOC. There's no real activity from short-term buyers in that, and shorts were a little behind on this from a real standpoint. Of course, Treasury yields and that, of course, nobody wants treasuries without a decent yield. Cutting rates doesn't do you any good. And so the market is reacting and saying, hey, no, we don't like it, not going to work. It didn't have any impact on oil in that because, again, that is going to be an entirely separate situation. That, though, is going to be the driver going forward. And Trump's not wrong on that. We've talked about this for years long, even before he was around, that energy pricing and that affects economic activity in a real way. And oh, what a shock. Oh, the euro, almost parity, almost sub-parity in this case. Really? Who didn't know that was coming? How long have we been talking about? But that's what the fun of it. We could see these things building and developing, and I'm just amazed at the foolishness of some of the economists that exist in today's world and just their absolute inability to grasp general concepts that were obvious from a long time ago. But again, we talked about this also in my video yesterday, the Fed's inability to deal with this idea of non-inflating asset prices. It's a problem. They don't have a model for dealing with it because everything is based on having inflation rising at a controlled level. And you're not going to have that. You're going to have deflationary pricing, and that is going to have a huge impact on how they can deal with, everything related to their models of how you handle interest rates and or Fed funds and that, and particularly the behind the scenes derivatives and everything else. From a gold standpoint, yeah, it suffered in there because some of this is going to be with that massive liquidity drop. People have to get rid of some of the separate assets to cover their overexposure into equities and things like that. And so this was a nice little Grinch surprise for a lot of them. No biggie. Bitcoin has so many more positive extremes to fill back. This was just the beginning. This took us back to, right in this range, but nothing too dramatic. There's still a long way to go to fill out some of the others. ETH. Oh, I'm going to sneeze. There we go. Yeah, that works. You put the little pressure right there, it stops it. ETH, yeah, not horrible. I think that's all expected from when you get that kind of move. The 50K sort of tells it we had the white MBI spike, started early here, secondary right before the beginning of it as we crossed below. Right at this level, we opened up right there around 61.30 with the short setup, and yeah, didn't take much to follow that. That's about as clean as it gets. Pretty simple view right there. Pretty straightforward. And then you get the funny charts in the intraday because it starts off and then boom, the selling right up there, same area, and put it right there. 6140ish range was identical to 50K, and it took a little bit of actual time for that to actually break down, but there it goes. Boom. Yeah. Not a whole lot to add to that. I mean, it's pretty straightforward. You're going to get some fill back now on that deep move. They're going to try and salvage some things, pull it back, but in the European session, it's rather muted because the Fed talking about worrying that Trump is going to be inflationary with tariffs. Again, complete misread and understanding of the construct. But the reality is that the lies that were told all the way through the final year plus of fake job readings and everything else hid. Not from those of us who were paying attention, what was really going on in the economy. And you're stuck with this high inflation and poor growth aspect. And that's what we call stagflation. At least we did back in the 70s. They're going to come up with a new name for it now, but it is what it is. I mean, you can dress it up in any other thing, put lipstick on a pig, but it's still just what it is. So that's the long and the short of it for now. As always, though, we just continue to follow these readings. I think those were all pretty nice. No objections to them whatsoever. So we'll keep following it. As always, though, have a good one. Trade well. We'll talk to you later.